Santi, no prep today. Jumping right in. How you doing, man?
It's raw. I mean, the market is just doing its thing. People are blaming.
This market is raw.
The NFT community is going through its first true cycle. They're blaming Blur.
Oh my God. Capitulation in full effect, huh?
You know, yeah, everyone's, the timeline is hysterical because, you know, last week it's like, we're going to catapult from 2K to 3K. You're not even going to notice it. Everyone's sidelined. Now everyone's freaking out because we're going to have 2 more rate hikes. And it's just a reminder to slow down a bit. You know, how you doing?
Good time. Panic's a good time.
It really is.
It is a good time. Anyone who can stay, I think the ability to stay calm during panic is going to be one of the most profound skills that you can have, or traits that you can have in crypto, alongside the ability to think for yourself and think independently. And I think we're watching that play out right now.
I was going to say that. People say, like, obviously, if you can hold two simultaneously contradictory, if you can hold 2 contradictory thoughts simultaneously, it's a sign of high intelligence. The other one is that's like raw intelligence, but also the emotional side is, you know, I used to joke with in my former boss at this venture fund that I was at, and they're like long timers. They were like early associates at KKR, like super successful careers. They've done like some of the biggest, most successful deals in private equity. And they were like so dismissive of crypto. I think they still are. And I'm like, guys, like, do you realize that what I've lived through, I've seen like now 4 or 5 market cycles, maybe more. I mean, we see them like every year now, it seems. Like, the education that you can get as an investor dealing with in crypto is bar none. I mean, just the level of things to keep up on a number of dimensions, on a different strategies, venture, hedge funds, liquid venture, it's wild.
Yeah, it is. Yeah, I was thinking about I watched the Yuval Harari. You ever read Sapiens? Mm-hmm. So Yuval Harari gave this talk at the World Economic Forum, and he said that eventually, and in the relatively near future, humans aren't going to have to think for themselves, because there's going to be so many algorithms and so many chips embedded in you, and you won't have to think for yourselves. And I was just thinking, like, man, the critical thinking, the ability to think for yourself is going to become exponentially more important in the future.
I think so.
Speaking of that, let's talk about today. Here's what I'm thinking about. So BlackRock, obviously Larry Fink just went on Fox.
Yep.
Blur, I'd love to get your thoughts on Blur. As you were mentioning, Blur's kind of getting ripped for being the cause of the NFT bear market. I would tend to disagree. I know you would probably disagree as well, but would love to get your thoughts. Talk about Coinbase is ripping. Some of the OG DeFi tokens are ripping. What else happened this week? Lido moved their treasury from ETH into Steth. Thought that was pretty interesting. But actually, I'd love to start with Threads, a non-crypto thing. So Facebook announced Threads, which is their Twitter competitor. Have you set up your Threads account?
No, I'm too busy doing other stuff. Like,
will you set up a Threads account or no?
I don't know. I mean, the incentive to claim it is like, you want to have a good username, right?
Yeah.
But otherwise,
basically,
I have no interest for now.
Yeah.
Have you?
I have not, but I probably will. Not because I plan on posting on Threads, but just to claim the username. But also, I mean, as I say, there's probably someone's out there claiming Jason and claiming Yano already, but that's okay. But no, I think it's just fun to try new products. It's also it's on track to hit 100 million downloads in the first like 24 or 48 hours, which makes it the fastest growing social media app in history. And I just think that's impressive, right? They already have 50, 60 million, maybe 70 million users already. And I think it's pretty interesting. If you look at the data, so if you zoom out and look at just the behemoth that Facebook has built, let's look at the top like 10 apps, top 10 social media apps. I'll read them to you in order: Facebook, YouTube, WhatsApp, Instagram, WeChat, TikTok, Facebook Messenger, something called Douyin. I don't even know what that is. Telegram. Telegram just passed Snapchat, actually. So Telegram, and then Snapchat. So of the top, what did I just say? 10 names.
WhatsApp, Instagram,
Facebook, WhatsApp, Instagram, and Facebook Messenger. 4 of the top 10 are owned by Facebook. So, and if anyone can do this, it's distribution base. Right? Yeah, exactly.
I mean, they have like 3 billion users on Facebook that you could basically that's a huge distribution base.
They have so many users that they have to create new internet, right? They have to give more people in the world more
Yeah.
access to the internet to get to grow the TAM. So I think it's very
At
interesting.
some point, they're going to get into the AI game, right? Because they have all this data on users, and the stock's going to rip another 2x, and everyone's going to be like, "Why didn't we think of that?" It's all these companies. I mean, they think of all the data that they have. Just going to leave it there, folks. I'm not long Meta, but he who controls the data can train the model.
I think we're living at a historic time, right? You have the best, no matter what you think of Threads, you have the best entrepreneur in the world building atoms, right? The best atoms focused entrepreneur in the world with Elon versus the best bits entrepreneur in the world with Zuckerberg, and they're going head to head. I think it's really cool.
That's a bold
I think
claim.
it's pretty historic time.
That's Zuckerberg. You would say Zuckerberg is the best bits entrepreneur.
Yes. Yeah. I mean, there's 3 billion users. Who else would you have?
Well, I was more curious to understand the definition of best and how you define best. But yeah, I agree. Like as a matter of touching the world, yeah, for sure. I agree.
Yeah. Used by the most people, biggest impact.
Like
whether
impact,
or not you think it's a good impact,
whether you think it's good or bad or relevant or not to you. But impact wise, yeah, I mean, I think he's like everyone in the world uses Facebook-ish.
Yeah. So to tie this into crypto a little bit, I've been thinking a lot about your social graph, right? I think this has showed the value of owning your social graph. I think there's some things that are interesting with Threads versus Twitter, right? There's supposedly kind of a different value prop from Twitter. Like Twitter is clearly for news, politics, more maybe like long form content. Threads inside of Twitter have really taken off. I think what they're trying to do with Threads is like share your personality, share your thoughts, more like a more casual, more social Instagram. I don't really like that value prop. I don't think that's really a value prop. I think what they're missing there is like I actually treat Instagram as like a personal thing. Twitter for me is work. Twitter for me is my work outlet. So, but okay. So tying it back to the social graph, the most interesting thing I think for me to watch is whether or not Threads cares about the giving you the ability to share your social graph. And so this guy Adam Mosseri, who runs Instagram, let me read this post that he said. He said, "We're committed to building support for ActivityPub, which is the protocol behind Mastodon, into Threads." He said, "We weren't able to finish it for launch given a number of complications that came along with building a decentralized network, but it's coming. If you're wondering why this matters, here's a reason. You may one day end up leaving Threads, or hopefully not, end up deplatformed. If that ever happens, you should be able to take your audience with you to another server. Being open can enable that." And I think that is going to be the key thing to actually watch here. They're going to be able to get users. They'll get hundreds of millions of users. They'll end up getting 1 billion users for Threads probably. I bet it'll be really successful. But the social graph and whether or not they follow through on that promise is, for me, the most interesting thing.
Where does that leave Lens, Farcaster, and some of the other crypto first applications?
I think it crushes them. I would love to have someone from Farcaster, or we've had Stani on a bunch, so maybe not. Or we could have Dan Romero or Stani. Maybe we could have both them on to do an episode there. But
for sure,
I think it's not good for them. And also
the activation. I mean, the thing of the unfair advantage that Facebook and Twitter and all these platforms have is the distribution that they've acquired over the years. It's always a chicken and the egg problem. It's like, well, they start from zero, but they at this point in time they have massive distribution. And for instance, like they displaced Snapchat. Like Instagram rolled out stories, and then a lot of people except teens stopped using Snapchat. It was like gone, like that. And the activation energy, a lot of the commentary I've seen recently is, so what are you supposed to like dual post and then go from there? A lot of the conversations and thinking I've done around Lens was, full disclosure, I'm an investor, was like struggling to understand and activating it in my flow of like, when I think of like tweeting, I think it's a verb. I think of tweeting. I don't think of lensing.
Here's why I'm slightly bearish on those apps, is because your social graph is something that you and I are talking about here. 99% of people don't even know what a social graph is. For most people, 99%.
So what is a social graph?
No, I mean, most people's social graph are 50 people follow them on social. You've got coworkers, family, and friends, right? I think people only care about the ability to kind of transfer your social graph after you are famous or a celebrity, or for some reason or another have built, 50,000 followers or 100,000 followers. Then you care about your social graph. But that's in reality probably 0.1% of these platforms, maybe even less. So for most people, it's just, I don't know, start on a new app and get your 50 friends, family, and coworkers to follow you.
But like practically speaking, so like say I have 100,000 followers. I could
flex on them, Santi.
I say hypothetically speaking.
Hypothetically, if I have 101,004.
Oh, yeah. So see, folks, listen, he's really tracking because we have an active bet that who's going to have more followers by permissionless. I'm not worried about
I lost 100 followers this week. I was like, what happened? I think people listen to this and they like you more, so they've unfollowed me.
Thank you, folks. I appreciate it. Free beers on me and permissionless. Anyways, what does it actually mean? Like, okay, so I want to leave a platform. What is it to take your social graph? Because your audience is still going to be in that other platform anyways. What does it mean? Like, you're going to target them, you're going to get their email, you're going to be able to interact with them by inviting them to come to whatever other platform. Then if that's the case, then the incentive is for everyone to then just spin up their own server and like have their own website and landing page and have people go in there and chat. But that's not the case. I don't think that's the case. Maybe I'm getting it all wrong, but
do you want to know the dirtiest little growth hack of Threads so far? That hasn't come into play yet, but will come into play when it comes to churn of the platform. You can delete individual posts. To delete your Threads profile and the data, you have to delete your Instagram account.
Yeah, I mean, the hook is there, but what is it? Going back to the initial question, like people talk about this a lot, but I have never heard a concise answer on what is the social graph. When you talk about porting it, what does it actually mean if you're like someone that, as you say, has a huge following?
Like, I think it's pretty simple. It's like imagine so today the world is built of social apps, right? And you follow someone on an app, and if I follow you on Facebook, I don't follow you on Instagram. You could envision this being very different, right? You can envision this being there's a social protocol, and there are just apps built on top of the protocol, and following and unfollowing gets built into the actual protocol. So let's say I followed you on like the Lens protocol. Any app that gets built on the Lens protocol, we would automatically follow each other. I think that's the social graph. Or, applied to Twitter and Threads to make this more applicable, the ability to like port over all of my followers. So I now have 100,000 followers on Threads, and I follow, I don't know, probably 3,000 people. Instead of refollowing all those people, I just automatically follow them.
That assumes that these other followers of yours have this profile set up in this other platform that you're going to. Correct? But the reality is,
or when they create a Threads account, it auto follows me because they followed me on the social graph, something like that. I don't know. To be honest, we've never seen it. We've never seen it applied in the real world.
It strikes me as this problem of airline points that you have some consortiums, but what's the incentive for Twitter to allow?
There's no incentive.
There's no incentive. And so when we talk about this portability, it's kind of like it's a mute point for me. I don't understand it until I see it. But you're probably right. I'm fairly bearish on anyone that talks about social graph. Maybe I'm a lizard brain here, but I don't see I see the value of it in theory. In practicality, I really struggle to understand how it works.
Yeah. At the end of the day, on social, people care about a few things: fame, money, dopamine. They don't care much about their social graph. So let's talk about fame and money. In other news, Larry Fink, who is the CEO of BlackRock, you like that pivot, appeared on Fox. And I thought it was a pretty profound interview. He said that BlackRock wants to obviously comply with regulators, but more importantly, he added that his views that Bitcoin is basically digital gold, that crypto is this really unique monetary investment because it's completely international. I thought it was a very and in his minds, he called for like the democratization of crypto. It was very pro Bitcoin, very pro even not just Bitcoin, but pro crypto interview. I'd be curious to get your thoughts on it.
Yeah, I mean, I think you nailed it. He's done a 180 pivot on his stance on crypto. Some have not, like Jamie Dimon has not, but it's impressive because they're the largest asset manager in the world, and their approval rating for ETFs is incredible. Like basically only one or two have been denied. And, did Larry wake up one day and come to this epiphany? No. I think there's a lot of institutional demand,
Yeah.
whether it's now or in the future. I think he sees it. And I think if you know the history of BlackRock very well, there's a great podcast that talks about it,
Yeah.
of how they've become just that. And they've been fairly innovative. And I think they see an opportunity because they are constantly in touch with their largest clients, and they see the window here.
Yeah. Why don't I share some of that history? Because I
Yeah.
think people don't realize, people are just realizing how big BlackRock is. People think of Larry Fink as just the CEO. I would argue that Larry Fink is now more powerful than Jamie Dimon, or at least as powerful, is the most powerful capital markets person in the entire world. And I think people underestimate that. So if you actually look at the background, um, he's been on Wall Street for 50 years. He basically, Larry Fink kind of pioneered this idea of debt securitization, right? Packaging up a bunch of different loans as bonds. He ran the trading desk for mortgage-backed securities, back in the day, in 80s, 90s, early 2000s. Got clobbered, took a wrong bet on interest rates, realized that client trust is important, risk management is important, so decided to start a new firm focused on those two principles. So he went to his buddies at Blackstone, not BlackRock, at Blackstone Group, got a $5 million line of credit, and that was when basically Blackstone Financial Management was born. 20 years later, so that was early 2000s, I think. 20 years later, bunch of M&A. This ends up becoming BlackRock.
Mm-hmm.
Now, today, BlackRock is the largest asset manager in the world. They have $9 trillion. Maybe, I think, actually recently hit $10 trillion of AUM, largest asset manager in the world. But what's more important than any of that is just the power that he wields. So let me just pull up a couple of these stories. In 2016, he was touted as Treasury almost became Treasury Secretary. I think if Hillary had won the election in 2016, he would have become Treasury Secretary. Very deeply politically connected, very vocal Democrat. Is often being heard as saying as I told Washington. That's kind of his line. As I told Washington. Let's see what else happened. There's some other big stuff. I'm trying to remember when this was. Okay, this is what it was. In 2020, do you remember when the Fed obviously started printing in 2020, kind of kicked off the bull market? When Jay Powell and the Fed needed to start buying corporate bonds to backstop the economy, who did they turn to do it? BlackRock and Larry Fink, right? When the FDIC came to wind down the portfolios of Signature and SVB, who did they have do that? BlackRock, right?
Yeah.
So very, very, very connected. Largest asset manager in the world, and I think it's I don't know, it's the equivalent of Jamie Dimon being very pro Bitcoin
or more. I mean, when BlackRock sneezes, the rest of the world catches a cold. I mean, they have positions in pretty much every major company. They're, if not the largest, among the top 10 largest holders by virtue of their size.
Also a huge investor. I think they start this. The writing was on the wall, right? They made a huge investment into Circle. Circle raised $400 million in 2022. I think it was April 2022. Two of the biggest investors, BlackRock and Fidelity.
Yeah.
Circle puts their USDC reserves into a BlackRock fund. A lot of people don't realize that.
Yeah.
So
that's interesting because of real world assets. And you talked earlier about the resurgence of DeFi and real world assets. We'll get to that later of how all this ties in. But I think the weight that they're now putting in terms of validating the asset class is probably the most important event in a couple of years. The approval of the ETF obviously has a ton of bearing and weight, but also just it being BlackRock, that I think is the kind of energy and catalyst that you need to change the tide and the narrative in Wall Street and in DC, and it's BlackRock that can do it more easily than others. I go back to a comment of Dana, I think Fitzpatrick, the CIO of Soros Family Office, that she said a couple of weeks ago that said, look, it's going to be the incumbent legacy firms that really come up and pick up the pieces and dominate crypto. It's certainly starting to look like that thesis is relevant, I'd say.
Yeah.
There's been also a lot of response after BlackRock filed the ETF. I mean, ARK refiled, and then they're in contention, and then they're first, and then second, based on a number of things. So there's now a fight, and then everyone else. I mean, I think it was Wisdom Tree and a bunch of others like filed an ETF. So of course, you got to wonder would they have filed for an ETF given their approval rating, knowing that they wouldn't pass. And I don't think that's the case. And I think they have a lot of interest from clients. I mean, that's the only reason why they would do it. I don't think Larry took it upon himself to read the white paper and then come to a massive realization and then started sending Bitcoin to friends and said, wow, my God, this is phenomenal. No, I mean, he's, I think, a very practical man and understands how he can expand his franchise. And this is an emerging asset class. You're going to want to capture it, and you're going to want to capture it with an ETF. A couple other 2 points I want to mention. One, the discount on the Grayscale products has been moving a lot. It at one point reached a 59% discount, right? And then it tightened to 30-ish range. I think under the expectation that all of this is going to have an impact on the way the court rules on the Grayscale, and also how that can somehow unlock the trap liquidity, if you will. If you can convert.
What's the discount at now? Like 25%?
No, I don't remember. I think it's widened a bit now, but it's been. I don't think it's as tight as 20.
Here.
But as you look
27.
at 27, there you go.
Wow.
Yeah. The second point, you talk a little bit of a transition in the Coinbase, of course, that it's rallied a lot. I think two catalysts attributed to that. One, I think the Baupost group, this is Seth Klarman, who's probably one of the smartest amongst like Ray Dalio and Renaissance, like Jim Simmons fund, like Baupost, like Margin of Safety, that book itself, like Seth Klarman is probably one of the most like low key guys, but like private guys, but like Baupost as an institution is widely respected amongst Wall Street. And so they announced, obviously they had exposure to the converts of Coinbase, and they said, look, this is not an endorsement of the company, but we just think it was, they have like $5 billion of cash and it's a mispriced instrument.
Right.
And then the stock like that day shot up like while like the ETF stuff was going down. And so I think those two factors really, like Coinbase went from 50-ish to like $70 or so. Like it's rallied a bunch. The reason the ETF is important.
Stock's up 130% this year.
Yeah, it's crazy.
130.
And in full disclosure,
I still think $75 Coinbase looks like a steal in the bull market. But
listen, guys, I mean, I've been public about this for a while. I have exposure to Coinbase, so I'm biased. We had folks on talking about Base. I think it's a company that is not understood by Wall Street. And I look at that as an opportunity to, one, an indication that we're early, and two, I've always asked this question when I'm making an early stage investment. One, is it going to outperform ETH or the underlying Bitcoin? And second, am I better off buying Coinbase stock? Because one might like actually track or be rally first. But I want to go back to one thing. I know I'm kind of like all over the place, but the ETF is relevant because my understanding is that BlackRock disclosed that they would use Coinbase. Yeah. And of course, that was a huge validation. All of this while the SEC is suing Coinbase. And so, I mean, I think investors are obviously worried about, the lawsuit and what the implications that can have on the company. But it's a huge endorsement when the largest asset manager in the world says, yeah, we're going to pick one player and it's Coinbase. And so I think,
and if you remember the announcement from that was a great point, Santi. But the announcement from last year too, when BlackRock selected Coinbase to be what's BlackRock's professional trading platform? Aladdin is their professional is their like wealth management platform. They announced that they're going to give clients access to trading and custody via Coinbase Prime.
Absolutely.
Right? So
yeah. So
likelihood of a Coinbase acquisition by BlackRock. What are you putting it at?
It was one of my predictions last year that there was going to be M&A and that Coinbase sitting at that value, Coinbase would be a prime acquisition target for a Fidelity of the world, a BlackRock of the world, JP Morgan. I mean, they could certainly swallow it easily. The question is, do you want it? Or do you keep it sort of at some sort of like distance and you just work with them?
Yeah.
I mean, I don't know. It's actually an interesting question. Do you think they get acquired by BlackRock?
No, I don't.
Feels like it's, yeah, no.
No, I don't. Problem with M&A from big companies, like traditional companies into crypto, is in a bear market, that's when you would do it, right? Because the valuations are the most depressed. However, if you're like a public company or you're a large traditional company, it's very tough to convince your board that buying a crypto company in a bear market makes sense. In a bull market, when everyone's pro crypto and you can easily convince your board that you need a crypto strategy, crypto valuations are far too high. So everyone always thinks that there's going to be a lot of M&A, but I think that's why you haven't seen the traditional to crypto M&A, and then you haven't seen crypto to crypto M&A because a lot of people raised in a boom need to get acquired in a bear, but their valuation expectations are far too high.
Yeah.
So,
yeah, we'll see.
Yeah, we'll see. Last interesting stat, then we can move on from that, is average open interest for Bitcoin futures on CME is at 2.9 billion. That is the highest it's been since December 2021, which was 1 month after Pico top.
Yeah.
So I think this pulls some other folks into the arena, right?
Absolutely.
Like I interned at Capital Group American Funds, which was a huge mutual fund back in the day. If you look at the top mutual fund groups, you have like BlackRock, then Fidelity, Charles Schwab, JP Morgan, Barclay Hedge, Fidelity, State Street, Capital Group, BNY Mellon, PIMCO, Northern Trust, Invesco. About half of those have crypto strategies, like from the top, CEO-driven crypto strategies. BlackRock, Fidelity with Abby Johnson, Franklin Templeton, family-run, CEO-driven crypto strategy. Half of those don't have crypto strategies. And I think what this is going to do is they're going to be forced, those big mutual fund groups are going to be forced into the market by their customers.
Yeah.
So
they all will respond, not because they believe in the space, but because they want to capture an opportunity that their clients, if not offered, will go elsewhere for. That's
all. NFT capitulation, you mentioned it. What's going on with Blur? Why are people what is the argument that Blur has caused the crash of the market? Can you explain this?
Price goes down and people look for a scapegoat. Yeah. I mean, I'll add more nuance to that. I think the incentives of season 1, 2, 3 of Blur, I think have people are claiming that has artificially, or I don't want to say, I mean, it's been influencing, if you will, the floor price and the activity of the NFT marketplace.
Is the argument that if you look at what Blur did, they incentivized a bunch of trading, and specifically, actually, they kind of incentivized some leverage. So what that did is it caused people who maybe had 10K to buy NFTs, they maybe put 50K into NFTs using Blur.
That on the margin, I think it was also the idea that with this collection, like it incentivized trading. So of specific collections, because you remember initially Blur would only support like for the season, like it was I think believe like certain collections for the launch of was it Blend, right? Their marketplace. Yeah. I tend to think it's like, you know, what Blur is effectively, and we recorded 2 podcasts with Pacman Tishan, so you should go listen to those and form your own opinion. But my view is that Blur, whether you want to blame Blur or not, the people that blame Blur will blame Blur or whoever else their view is that financialization is bad. My point is the market, what Blur has done is introduce more efficiency to to the market, especially when you think of NFTs. I mean, they're fairly more inefficient. And so it's sort of, you allow for more ease of transactions. You bring more liquidity that creates more price transparency of these collections. And you got to wonder, was the price actually in the first place? It was probably inefficient. It was probably, you know, why don't we go out and blame all the hype of these collections that talk about utility and have not delivered? Why don't we talk about the celebrity endorsements and the certain wallet providers that were like sending and gifting NFTs without publicly disclosing this to artists and celebrities? That's real. Like that's something that should be talked about more. But no. Let's blame this instrument that allows for more price discovery. I would say let's get to it faster. If we can create more efficient markets, then all the better, because you're going to have a better price discovery. I just hate fundamentally inefficient markets, because then this is what happens, right? Um, let me ask you a question, Jason. How easy is it for someone to manipulate the stock of a public company that is worth like a couple $1 billion, like a large cap, like in the S&P 500? How difficult is it?
Difficult.
Yeah, quite difficult. Like you can have people chat, or you can have like Muddy Waters or whatever put a report. It certainly has an impact, right? But in crypto, it's so sensitive, right? Because there's low liquidity and it's not.
Yeah, get a little nice Twitter thread going and
Yeah, exactly.
got yourself a pump. Yeah.
So that's where I stand, and I'm in that camp. Like we could talk about, are the incentives structures correct or not? But look, there's always incentives, no matter how you slice it, whether it's earning Blur tokens or, there's another NFT marketplace that does this, So that's my view.
Yeah.
I mean, of course we can talk about royalties and creator royalties and all this stuff, but I would just encourage people to go listen to the Blur episode.
Yeah. Bored Apes about to go sub 30 ETH.
I mean, is there a price where you buy them? Candidly, no.
Bored Ape?
I just don't like them. I actually sold them. I sold them.
I wouldn't. I'm not a buyer at any price of Bored. I mean, maybe a couple ETH, maybe like 5 ETH or something.
This begs the question. And
I think CryptoPunk's under 40. I've done a lot of thinking since our last conversation.
Okay.
I think sub 40 ETH punks are a nice buy.
Let me ask you a question. Like, what does this tell you about the NFT marketplace? The fact that people are like, one, I mean, I think it's going through a capitulation, but we've at different moments of time talked about what is the composition of the NFT community. And what percentage would you say are purely buying these things to speculate on them?
What percent are buying just to speculate?
Like I want to flip this in 6 months because I think the price.
I mean, previously probably 99%, but I think the folks who are left remaining are people who have. I mean, look at this is just like semi-data driven. Look at the collections that are doing well. It's like punks, squiggles, autoglyphs, Fidenza. It's people who are as close to art collectors as you can get in NFT land.
Yeah. I mean, there's still a lot of bag holders, right?
Yeah. But that's what's doing well, right? Any of the like metaverse land, building a game, like those are doing awful. That being said, Santi, I still do. I like this is how all markets go, right? You have greed, excess money comes in, deep bear market, people start blaming other people for failures, and then market comes back. And it's interesting to see this happening along. It does feel like NFTs are 1 year lagging behind DeFi, basically, right? Like it feels like we just got into the absolute depths of the bear market for NFTs. Full capitulation. Mm-hmm. This is where DeFi was a year ago. A year ago,
I mean, it's
kind of felt like DeFi was like, oh man,
arguably still is.
Yeah, but I mean, look at the price of some of these OG DeFi tokens right now. Look at some of the innovation that's happening in DeFi. We're about to have ECC, and I'm sure a bunch of the stuff coming out of ECC too. But like, man, the DeFi innovation is nuts right now.
Yeah,
stuff going on in liquid staking.
It's a tough comparison, right? Because one is meant to have utility, the other one arguably not. But I think this is a clear reflection that a large subset of the NFT community is just speculators, which is fine. That just want to speculate, and look, the trade went sideways and hasn't worked out for them. And so maybe you should just, when price goes up, you're a collector. You're an art connoisseur and you're in it for the culture. When price goes down, it's like, oh, let's blame this this platform that allowed for people to dump on me. Well, folks, I think this is maybe just reflect on, why are you buying these things? I've said it time and time again. I don't consider, and people should go perhaps even listen to the episode that we did with Punk 6529, right? Where we asked him, like, how do you think about, because he talks about items in a public collection that he never intends to sell. And he talks about certain pieces that are part of his fund that at some point he will dispose of and capitalize on. And I think I'm actually fascinating to see how that thesis and that strategy plays out, because I've always found it incredibly hard to let go of things that I collect. And perhaps the most important distinction that I try to make when I make an investment is not to fall in love with it, but just think of like rationally, where do I exit?
Yeah.
You constantly kind of revisit your thesis, right? If
You don't
thought
want to treat an investment like a collection, like a
right,
collector's
yeah.
item. You don't sell. You hold on to that. You pass it down. An investment.
Yeah. I mean, look, I think there's always a price by which you really start contemplating. If say you buy a car for 10K and then someone comes in and offers you $1 million, well, you know how much you love the car. I mean, I think you probably let go of it because there's
Right.
other things that you might want to buy a house, whatever. So all these kind of relative opportunity costs. But what I'm trying to say is it's not the motivating driver for you to go out and buy things that you like as a collector, I think. But to each his own. Look, this is my perspective. It has helped me in some capacity. I know that some punks that I bought are deeply underwater. I still love them when I see them. It's like I didn't go in there thinking, oh God, like this punk is like the price doesn't compute as much, like not even.
Yeah.
I certainly know what I paid for them.
By the way, Santi, like on your question of speculators, it is a funny thing that speculators are looked down upon, actually, I think. And a lot of my like folks outside of crypto often like to say, oh, isn't crypto just for speculating? And I think if you like read history and you study history, like speculators provide the necessary liquidity and risk taking that enables new industries. And if you look at the oil industry, right? Oil industry was fueled by wildcatters, right? These like crazy speculators who purchased land and drilled in hopes of striking it rich. And like that was speculation, but the speculation led to these discoveries of like oil reserves, which led to the growth of the oil industry and then all the ancillary sectors that came from that.
Mm-hmm.
And like technology, right? Technology in part grew because of the venture capitalists who were willing to take these huge bets. Even the rise of like agricultural industry, right? You have like early farmers taking the risk of investing time and resources into the land in hope of a future yield, which
speculating is part of the fundamental human desire to improve your condition. There's a nuance between are you speculating or are you gambling? But I don't have any problem with speculation. And in fact, I think as you said, it is the primary driver for innovation. And we should not think of it as a negative energy. It fuels everything. I mean, it fuels innovation, fuels curiosity, everything.
Right.
There's nothing wrong with making money. Some people somehow, this woke culture is like, oh no, don't ever talk about money. I'm like, what's wrong with that? Like, money is highly dense energy to move things and, fuel interest and new movements. Like without money, good luck.
Yeah. Last thing for you, and then we can make this a short roundup. Is so I saw this week Lido just executed proposal 161, staking all of the ETH, 20,000 ETH in the Treasury into stETH. So they now hold. So this is their Treasury now, 21% in stETH, about 63 million, and 76% in Lido, 200, which is 231 million. So I just thought that was an interesting treasury management strategy. Put your money where your mouth is. Question for you: and I don't know if you're comfortable sharing this or not, but what percentage of your ETH is some form of staked ETH?
Between a third and 40%.
And why that number? Is that is that on purpose, that number? That's a thoughtful number, or it just kind of happened that way?
I've over time just kind of staked it more, and I've restaked it for some other things, but I just sometimes like to hold, like the question is, will I ever stake 100% of it? No, because I like to keep ETH pure at sometimes to just do other stuff. For risk management purposes too. Like I know it's liquid and whatnot, but I want to see more Lindy. I know I'm foregoing a yield. That's fine. But you made me think maybe should it be 60, 70, 80%? I don't know. What do you think?
I'm going to make a decision on that. I don't have, most of my ETH is not staked ETH, and I'm leaving money on the table, and I know that. So Bell Curve, another Blockworks podcast, just launched season 5, and it's an entire episode. It's an entire season on liquid staking, basically. So I plan on basically it's on staking, liquid staking tokens, restaking, eigenlayer, liquid staking across different ecosystems, like looking at Cosmos and what that looks like, kind of history of liquid staking, the risks of liquid staking. So that's a whole season led by Mike, and then also this guy Miles O'Neill from Reverie. Going to be a really interesting season. So basically, I plan on listening to that season and then making an assessment. But I think I'm underexposed to liquid staking.
Yeah. Well, I'll listen to it too. I don't think it's one of the, you kind of caught me there off guard a bit because it's one of those things where I haven't dedicated enough time to think about how much I want to stake actually.
Same. But this new season's made me start to think about it. So
yeah.
That's kind of all I got, man.
Yeah, a couple quick things. ECC coming up, so a lot of announcements.
Are you going?
No. The only conference I'm going to this year is Permissionless.
Let's go. Why?
I don't know. I just like conferences are meh.
Why Permissionless though?
Because I'm actually excited to for real go, because last year I didn't go. So yeah, I think it's once a year, one conference once a year. I think is sort of where I've landed. I prefer to I'm more productive when I'm not at conferences, and if I want to see someone specifically, I'll make a point to do that. And I think it's more targeted. Sometimes I found myself going to conferences and a lot of people are there, but the depth of the conversation is unfortunately not really there because your attention span is so low. Like you're running around and all this stuff. But I enjoy it. Like virtual conferences. I've done a lot. Austin's. Yeah, well, I'm excited to go.
Do we have you? What are you speaking about?
No idea. No idea.
It's a good lineup. We've got like Voorhees, Anatoly, Raj, Hester Pierce, Jesse from Coinbase.
Well, that's the other thing.
Head of Crypto at Apollo. Stani's coming.
Yeah,
Tom
I think
Emmer.
the composition of your ECC is a great event. I've been there a number of times. ETH Denver, like some of these like pure ETH conferences are really good. I found myself one year in Paris, like in my hotel room or a cafe, streaming these videos in 2x the speed while the conference was going on. And so I was like, okay, well, maybe I should just stay at home. But my understanding in talking to you, Permissionless is a crowd, a more diverse crowd. And I'm actually quite curious to understand more like the sentiment of someone like, you don't get Hester Pierce at ECC, and so you have a mix of crowd, and it might be one of the more diverse conferences out there. It's not like BTC Miami is pure BTC folks, and then there's like side events. So I think it's more for that reason, I find it quite valuable. I mean, the other one I have been going to is Token 2049 in London and Singapore. I don't want to go to Singapore. It's like too far this year. So, now I'm prioritizing going to Permissionless.
Yeah, I agree. Yeah, if you've got like Toggle, like the head researcher at Scroll, sitting next to Jim Bianco, this macro guy, next to Ben Foreman, next to Ben Jones from Optimism. So I'm pumped. By the way, if people want to learn more, we have, it's just blockworks.com/permissionless. So easy.
Soft plug, I guess. The other quick thing I wanted to mention is I saw, I mean, just as an anecdote, we talk about secondary opportunities a lot. It sounds like Tiger paused their sale. I mean, they were like doing fire sale in their secondary portfolio. It sounds like they paused it because they got so low stink bids. They're like, might as well hold the bag.
It's too tough to value individual companies, I think, at that point. Like they were selling off, I think it was like open season on 400 of their portfolio companies, right? And it was like anyone can buy anything.
Yeah, it was a fire sale.
Yeah.
Yeah.
Did you see the Thai exchange? I'm forgetting the name of them, but the leading crypto exchange in Thailand raised at $1 billion valuation a year or two ago. They just raised it at $184 million, so down solid 85%.
Yeah, I mean, we'll survive. Hopefully, I mean, at this point, a lot of founders are looking in the mirror and saying, maybe that other valuation, wipe it out, and recap and survive.
Yeah. I saw a company on Solana just shut down this week. A lot of folks shutting down. I really respect when companies shut down.
2 of my portfolio companies last week returning capital. And both of them, I said, guys, the two things I say is I respect that. Two, maybe you've read, maybe you've not. We've talked about in this podcast is this book, Quit, knowing when to quit.
Yeah.
Super important. And I really respect that. I'm about to back a founder that closed shop a year and a half ago, relaunching another project. And so I'm excited about that.
Nice. All right, man.
This
Good
is
chat.
good. Great chat.
Short week, July 4th week, but
yeah.
I hope everyone had a good July 4th. I finished the 3-body problem.
Good.
Very good. I'd highly recommend it. I'm on to the sequel now.
Excellent.
I'm watching Silo, the new Apple TV sci-fi movie or show. It's very good. I watched The Bear. The Bear was incredible.
The Bear?
The Bear is incredible. The Bear is very good.
It's like about a bear.
Go watch it. It's about a restaurant guy.
Okay.
It's about a restaurant.
I'll plug it. Great. I finished one book called Jellyfish Age Backwards.
Oh, you finished it. Good?
Yeah, it's really good. I love it.
You do look young today.
Thank you. I'm sure someone in YouTube comment will say NFW.
I think folks are just regretting that they didn't turn this episode off already.
Exactly. I know. For anyone still listening, this actually fantastic book. I started reading it. It is called Awe. Wait a second.
Awe?
Awe, like you're in awe. Awe, the new science of everyday wonder and how it can transform your life, by Dacher Keltner. And I was reluctant to buy it at first. Because it was like, one of these self-help books. I'm like, I'm not really into that stuff. But I was Behavioral Scientist is a blog that I follow a lot, and they had it in their list, and I bought it. Honestly, wow. Like, I'm in awe about awe. Let's put it that way.
All right, folks. Good pod.
Everyone, hope you had a happy 4th and you celebrate.
This is what happens when it's a light news week. All right, man. Well,
just gotta plug this. Let's just gotta shut it down.
Enjoy reading that book, and we got to get one of those Amazon links, where every time someone buys a book, we're like, support the pod, buy the book. We get like 15 cents. That's how you know it's a bear.
I was gonna say, folks, true. This is the bottom signal.
All right, I'm getting kicked out of the podcast room. Folks, see you later.
Thank you, guys. Thanks for listening.